Hello everyone, my name is Stephen Fox. Welcome to my channel. Well, sound the trumpet and strike up the band. Artificial intelligence is marching forward, led by good old Nvda, Nvda. What a spectacular stock as it leads my other 7 artificial intelligence stocks forward. And I'm adding another technology stock to this group, Applied Materials AMAT, which I've traded off and on since the 1980s, and I've virtually always made money on it. This is quite a nice stack of stocks, as you're going to see. You want to stop listening to the bears. The bears have been wrong for over a year. It's time to get with it. I can see they're being puzzled because everything should have gone downhill, but it didn't, and it's because of artificial intelligence. Artificial intelligence is virtually holding up the entire market. It doesn't hurt that unemployment is low. The inflation wasn't nearly as bad as we thought it was going to be. We have these technological advancements, which is going to carry us forward. And I think that's why I'm in technology so strongly, with an emphasis on artificial intelligence. I think this is a trend. If you're young, if you're in your 20s, 30s, 40s, 50s, you've got a trend here that's going to carry you forward for many decades, I believe. Starting with Nvda, it's the way you like to see a stock move. Looking at the 1-month chart, it has that nice movement, gradual movement upwards with occasional hiccups. You got to expect that in the stock market. And this stock, I can keep a 4% trailing stop loss on it because it doesn't have that much variability. Some stocks I got to increase that trailing stop loss to like 8%, as we will see with Super Microcomputer. That stock is so volatile, I had to increase the range to 8%. Otherwise, I was just going to get stopped out all the time. But a 4% stop loss with Nvda seems to work out well. Since I have almost 800,000 in it now, I have 1,000 shares. So whatever the share price is times 1,000. Nvda is towards the top of its Bollinger Band, and its relative strength is 72, which is good. Smci is my wild child. It gives me conniptions, as I think it gives other people conniptions. Looking at the chart, you can see what a wild ride it is. And I think it shakes investors out of it. Simply, it is jarring to have these dramatic moves like it has. I've had to increase the trailing stop loss to 8% just so I'm not stopped out every day. Okay, its relative strength is 61, which I think is a result of it shaking investors out because of its wild ride. I think if I can stick with it, I think this will turn out very well. I think it's going to stay above 800, so basically 8% right now takes me right around to 800. And I notice in the aftermarket, in the immediate aftermarket, it went up to 875. So I'm hanging on for the ride with this one. I'm giving it a greater berth. I'm not particularly worried about it because it tends to have dramatic movements upwards, and it will follow Nvda, which is doing fine. And then we have what I call my A squad, starting out with Broadcom, which is AVGO. It connects everything with everything else. And as you look at the 1-month chart, you can see it has a nice upward course. It's not driving you wild like Smci is doing. And it also has a relative strength of 61. I don't think it's overbought at all. It's at the top of its Bollinger Bands, but we're in a breakout period with artificial intelligence stocks. Broadcom is at a relative strength of 63, which to me means that it's not overbought at all. And then Asml, the Dutch company that's vital to transferring the artificial intelligence electronics onto semiconductor chips. There's not another stock like it. It's kind of the only game in town. I guess at this point it could be considered kind of a monopoly because they're the only ones that can handle the complexity of artificial intelligence at this point, putting it onto the semiconductor chips. And as you look at the chart, again, you can see this gradual uplift. It has its kinks, but they're never very big. And I have a trailing stop loss of 4% on this one because it just doesn't vary that much. And when it does vary, it tends to go up for the most part. Its relative strength is 66, which is good, and it's towards the top of its Bollinger Bands, which is good because artificial intelligence is breaking out all over. And then AMD, Advanced Micro Devices. I've been maligning this stock for some time, and it's the least of my holdings, but I own about $36,000 of it. So it's not nothing, but it tends to be the least of my holdings. But it's doing what I was hoping it would do, where it finally broke out on Thursday, and it went up 15 points. Prior to that, much of my frustration is what traders would call it's just diddling in the middle. It's not really going up that much. It's not really going down. It's just diddling in the middle. And finally, we got a breakout. It's proudly breaking out above its Bollinger Bands, and its relative strength is 68, which usually means there's more to come. And Advanced Micro Devices, they might not have chips quite as good as Nvda, but Nvda can't make enough chips, and so the excess tends to go to Advanced Micro Devices, and they will do well on that basis, probably. Vertiv Holdings, VRT, provides electrical equipment, notably cooling systems, to data centers, and it's been doing well after recovering from a slight stumble. As you look at the 1 month chart, you can see that stumble about a week to 10 days ago, and it's recovered nicely, and it's breaking out right at the top of its Bollinger Bands, and it is breaking out along with the other artificial intelligence stocks. And this is one of my favorites, and I own a good amount of it, and I'm going to keep it because it's a very solid stock. Nsit Enterprises, NSIT, has been struggling, but has managed to make some gains in the last month. Relative strength is only 55, and if you look at the volume down below, in the last week to 10 days, the volume has increased. On Thursday, it went above its 22-day moving average, and it's not at the top of its Bollinger Bands. We're waiting for a breakout on this one, but it is increasing its volume, and it is higher than it was a month ago. And I think it's due to them doing more cloud business, especially with their partnership with Microsoft, which should propel this stock higher. Cdns, Cadence Design Systems, makes the software that Nvda and AMD, Advanced Micro Devices, uses to create their CPUs and GPUs. Looking at the chart, you can see that Cadence Design Systems has had a good month with fits and starts, but it's currently above its 22-day moving average. It's towards the top of its Bollinger Bands, not excessively so, and its relative strength is 59, which indicates to me that it's not overbought whatsoever. And I think this stock has good staying power, and I own a lot of it, and I'm going to keep owning a lot of it. These artificial intelligence stocks, they're in a little world of their own, and they're holding up the entire stock market, I believe. And I just bought Applied Materials, which I've bought off and on since 1980. And its price to earnings is 25, which is good for a technology company, but its earnings growth rate is only 8%. Why is the stock turning around? Well, it's been kind of lackluster the past 18 months, but the new excitement is because of artificial intelligence, of course. It's gearing its processes towards making machines that make artificial intelligence chips rather than industrial chips. And so again, it's all artificial intelligence, which is propelling this bulwark of the internet forward. And as you look at the 5-year chart, I wanted to do a 5-year chart so you could get more of a perspective on this company. You can see it kind of dipped down, but then it has been coming back. And recently, It's got that steep upward movement, and that's a breakout, and that's due to artificial intelligence, of course. And its relative strength is 75, which on a breakout is a good thing. I think there's more advancement to be had here, and it's just a good, solid company. And even if I'm wrong, I'm right in the long term holding this. In fact, the account I have it in is my more long-term stocks that I don't want to look at and just kind of want to leave alone for a while. It's in that category. I think I'm going to come out well with it. So inflation is not too bad. Recession looks nowhere in sight. Long-term interest rates actually came down a little bit recently. It looks like there's no major negative events, at least foreseeable, on the horizon right now. And I think we got like a month of being in the clear. So I think I'm going to take advantage of this. And I'm beginning to see that day trading, you can only do that when the market is volatile. The VIX has to be above 15 certainly, and preferably above 20, and way more preferable is for it to be above 25. I really don't want to trade short term on a day trading basis unless it's above 20. And I think it's just the heart of foolishness unless you know something other people don't know about a stock, which I guess would be inside trading, which would be illegal. So you don't want to do that. I think you got to have the volatility. You need that volatility to day trade both in a bearish way and in a bullish way. You know, during the bear market in 2022, I could make money going bullish on days because you would have these screaming bear rallies, which are really intense because they're relief rallies, and you can make a lot of money, but you've got to have a VIX. You got to have a VIX above 20. I prefer it to be above 25. That's the way I roll. Thanks for watching.